It's the third month of the first quarter of this year, and we thought it would be a good time to do a video series on the new taxes that came in at the beginning of the year in January. My name is Felicia Solomon. I'm a partner at MMS Advocates, and I will start off the series with just a brief introduction on some of those new taxes that were introduced, which was the minimum tax and the digital services tax. So the minimum tax became effective on 1st January 2021. It's a base income tax, which means that all businesses, at the very least, will have to pay the minimum tax. Now, the minimum tax is charged at 1% of gross turnovers, which means there's no deducting expenses. And also, it is payable when it's the higher of tax payable if you compare it with installment tax. So to understand this, what that actually means, I'll first start by explaining how KRA has been collecting taxes from income from businesses. So right now, a business is required to estimate how much taxes will be payable in a current financial year. So you can use different methods of doing these estimates. One way is to look at the tax you paid in the previous financial year, and then you increase it by 10%, and then you divide that by 4, because it's 4 equal installments according to the tax quarters, which are slightly different from a normal quarter of a year. Then you pay the 4 equal installments at the set time, so which is by the 4th month, by the 6th month, by the 9th month, and by the 12th month. And then at the end you reconcile, because now you'll have closed your books, calculated your actual profits, and then you would have done the 30% of the profits to get the tax payable. And then you now look how much taxes have you paid so far using the advanced tax system. If you have an overpayment, that becomes a tax credit that you can offset your next year's tax obligations. If you have an underpayment, then you pay the balance by the 4th month after that financial year. Another way, you could estimate your profits for that year, and then you calculate the tax on that, and then divide it by 4 equal installments and pay them according to that installment tax system. So, of course, now you have your installment tax. You know them already, your 4 equal taxes in a year. How the minimum tax is going to work, it has the same installment tax format, so it follows what KRA is already doing. But now you will get to that first quarter, so this is month 1, 2, and 3. You have your actual turnovers there. You do 1% of the gross turnovers within that first quarter, and then you compare it. So you'd already have calculated your installment tax as usual, and then now you calculate this minimum tax and by 1% of your gross turnovers there, and then you compare which one is higher. So the higher one is the one that is payable. So again, you do that for all the quarters. So in the second quarters, which will now be the 4th and 5th month, you again look at your actual turnovers during that period, 1% of that, to get the minimum tax. Then you compare it with the installment tax that you had already calculated, and you pay the higher of. So that's explains how, because as a taxpayer now you will be required to pay the higher of, and that's how you calculate which one is actually payable at that quarter. And so the thing is, for businesses, you have to be now very keen on record keeping, because you now have to record your turnovers. One thing that a query that we get a lot, or something that we have to keep highlighting to clients, is that, in fact, for companies, under the Companies Act, all companies are required to file financial statements. And even if you have it's a company with revenues below 5 million, they need not be audited. They could be management accounts, but they actually need to be filed. Therefore, you can see how the minimum tax is actually the base income tax for businesses. So as long as you're in business, you have sales or you have income coming in, then you're able to derive the minimum tax payable at every quarter, and you're required to compare this with your installment tax. So even if you are saying my estimated installment tax is 0, then you would still have the 1% on your gross revenues for that quarter that will now be what you will need to remit to KRA as your minimum tax. In incomes that are excluded from minimum tax. And these include people who are paying turnover tax. And turnover tax is a tax that is available for businesses with annual revenues of between 1 million and 50 million. So if you have opted to pay turnover tax, then you're exempted from paying minimum tax. Income that is derived from residential rental income, it's excluded. Employment income is excluded. Income from the extractive sector, so this is mining, oil and gas, that's excluded. Income from insurance business, income from retail businesses where the price is regulated by the government, that is excluded. Income that is subject to digital services tax, that is also excluded. Thank you for watching. I hope that you will stay with us through the entire series. Thank you.